The year is 2024, a year that marks a significant turning point in the global economic landscape. The US dollar, once a symbol of unwavering strength and stability, is experiencing a noticeable decline. This decline is not just a minor fluctuation, but a significant shift that has caught the attention of economists and policymakers worldwide. This shift in the global financial landscape is sending ripples across the world, impacting economies big and small. The interconnected nature of today's world means that changes in one major economy can have far-reaching effects on others. From bustling megacities to remote villages, the effects of the dollar's wobble are being felt far and wide. In major financial hubs, traders and investors are recalibrating their strategies, while in smaller communities, the impact is seen in the rising cost of goods and services. But why is this happening? What are the underlying causes of this significant shift? A confluence of factors is contributing to this change. These include geopolitical tensions, shifts in trade policies, and the rise of alternative currencies. Additionally, the global pandemic has accelerated some of these changes, highlighting vulnerabilities in the economic systems. The US economy, while still a powerhouse, is facing challenges. Issues such as national debt, inflation, and political instability are creating a complex environment that is difficult to navigate. Emerging economies, on the other hand, are experiencing remarkable growth. Countries in Asia, Africa, and South America are becoming new centers of economic power, creating a shift in the balance of global economic power. This growth is driven by technological advancements, increased foreign investments, and a young, dynamic workforce. This isn't just about numbers on a screen, it's about people. The decline of the US dollar and the rise of other economies are having real-world impacts on families and individuals. Families are struggling with rising prices for everyday goods and services. The cost of living is increasing and wages are not keeping pace, leading to financial stress for many. Businesses are grappling with fluctuating exchange rates, which affect their bottom lines. Companies that rely on imports and exports are finding it challenging to predict costs and revenues, leading to uncertainty in the business environment. The world is watching closely as the greenback's dominance wanes, creating uncertainty and opportunity in equal measure. Investors are looking for new safe havens, and countries are rethinking their economic strategies. This period of change is both a challenge and an opportunity for innovation and adaptation in the global economic landscape. The weakening dollar means that countries using the US dollar for trade are facing higher import costs. This is a significant issue for nations that rely heavily on imports to meet their domestic needs. As the value of the dollar drops, the cost of goods and services purchased from abroad increases, putting a strain on national economies. This is particularly impactful for essential goods like food and fuel, leading to inflationary pressures. When the cost of importing these necessities rises, it often results in higher prices for consumers. This can lead to a cycle of inflation where the cost of living increases and wages struggle to keep up. Consumers are feeling the pinch as their money buys less, and businesses are facing difficult decisions about pricing and production. Companies may need to raise prices to cover higher costs, but this can reduce consumer spending and hurt sales. Alternatively, they might cut back on production, leading to job losses and further economic decline. This is not just an abstract economic concept, it's about real people facing real challenges. The weakening dollar affects everyday life, from the price of groceries to the cost of fuel for commuting. Families must make tough choices about their spending, often cutting back on non-essential items to afford the basics. A family in India might find it harder to afford their monthly groceries. The rising cost of imported food items can strain household budgets, forcing families to seek cheaper alternatives or reduce their consumption. A factory in Brazil might struggle to import raw materials. The increased cost of these materials can lead to higher production costs, making it difficult for businesses to remain competitive in the global market. This can result in reduced output, layoffs, and a negative impact on the local economy. The dollar's decline has a ripple effect, impacting lives and livelihoods across the globe. From small businesses to large corporations, the weakening dollar influences economic stability and growth. It affects international trade, investment decisions, and even the financial markets. The interconnectedness of the global economy means that the decline of the dollar can have far-reaching consequences, touching every corner of the world. As the US dollar experiences turbulence, the global financial landscape is undergoing a significant transformation. A new constellation of economic powerhouses is emerging: BRICS, which stands for Brazil, Russia, India, China, and South Africa. These nations, each with their unique strengths and challenges, are coming together to reshape the global economic order. BRICS nations are banding together to create a more multipolar world, where power and influence are more evenly distributed. They are establishing their own financial institutions, such as the New Development Bank, to support infrastructure and sustainable development projects. Promoting trade in local currencies is a key strategy, reducing reliance on the US dollar and fostering economic independence. This move challenges the long-standing dominance of the US dollar in global trade and finance, signaling a shift in economic power. However, this shift towards a more multipolar world is not without its challenges. Geopolitical tensions and economic disparities can complicate cooperation. Navigating these complex realities requires careful diplomacy, strategic thinking, and a commitment to mutual benefit among the BRICS nations. Despite these challenges, the potential benefits for emerging economies are significant. Increased investment, technological exchange, and economic growth are just a few of the advantages. As these nations continue to collaborate and innovate, they pave the way for a more balanced and inclusive global economy. Indeed, a new dawn for emerging economies may be on the horizon, promising a future of shared prosperity and sustainable development.
Brazil, with its vast natural resources and burgeoning agricultural sector, is carefully navigating the shifting currency tides. The country is actively seeking to reduce its reliance on the US dollar, promoting trade in its own currency, the real. It's a delicate balancing act, requiring strategic partnerships and a keen eye on global economic trends.
India's rupee rumble, steering towards stability. India, a technological powerhouse and one of the world's fastest-growing economies, is also making strategic moves. The Indian rupee is gaining recognition on the global stage, and the country is actively promoting the use of the rupee for international trade. This shift reflects India's growing economic clout and its ambition to secure a more prominent role in the global financial system.
South Africa's strategic shift, embracing new opportunities. South Africa, a gateway to the African continent, is strategically positioning itself to benefit from the changing global economic order. The country is actively strengthening its ties with other BRICS nations, exploring new trade routes, and diversifying its economy. This proactive approach reflects South Africa's determination to seize the opportunities presented by the shifting global landscape. A chorus of experts, voices from the world of economics. Renowned economists are closely monitoring the evolving global economic landscape. Some express concern about the potential for instability and volatility. Others see this as a necessary correction, a move towards a more equitable and balanced global financial system. Their insights provide valuable perspectives on the complex forces shaping our world. A world of opportunities, emerging markets in the new economic order. For emerging markets, the decline of the US dollar presents both challenges and opportunities. While volatility in currency markets can create uncertainty, it also opens doors for growth and innovation. Countries that can adapt quickly, diversify their economies, and forge strategic partnerships are well positioned to thrive in this new economic order. Charting the future potential scenarios for the global economy. Predicting the future is a complex endeavor. However, by analysing current trends and considering various factors, we can envision potential scenarios for the global economy. Will we see a multipolar world with several dominant currencies, or will a new global reserve currency emerge? Only time will tell. A new chapter in global finance. The decline of the US dollar marks a significant turning point in global finance. We are witnessing a shift in the balance of economic power, with emerging markets playing an increasingly important role. This new chapter brings both uncertainty and opportunity. How the world adapts and responds will shape the global economy for generations to come.